Stick to your main business. Don't get lost in asset diversification.
Always fun having you.
Thanks.
Pete?
Yeah, great stuff. I keep an eye on these airlines, the way they've bounced back. I think the transportation area is the place to watch.
Ryland, I bought it today.
Stay tuned to 1 o'clock. Yelp is halted. Wow, that's big news.
Okay, that does it for us. Power Lunch begins right now. Tyler Matheson is in D.C. at the Investment Company Institute Conference. Take it away.
Thank you so much, Scott. You wonder where your money is? Well, I'll tell you that the people who run about $18 trillion worth of it are right here in Washington at the Investment Company Institute's annual convention. And we'll talk to some of the best and brightest of the mutual fund business exclusively over the next couple of hours. We'll lead off with Walt Bettinger, the head of Charles Schwab. We'll ask him about what the retail investor is thinking right now and whether they are really, really ready or not for rising interest rates. Bill McNabb, the head of Vanguard, will get his thoughts about Vanguard's total bond market index fund surpassing PIMCO's total return fund. And we will ask him whether index funds have won. Is it game, set, and match? Also, we'll talk with Spider-Man. That would be State Street's Jim Ross. He is the guy who oversees billions and billions of dollars in exchange-traded funds. Who's using them? Are they being used wisely or not? We'll talk retirement savings with the retirement heads of J.P. Morgan Chase and Bank of America Merrill Lynch. And we'll put it all, folks, into the context of what's going on in the market today. Troubles for stocks ahead? Are they overvalued, as Ms. Yellen said yesterday? Rising oil prices, falling jobs numbers, all that ahead over the next 2 hours on Power Lunch. Meanwhile, back to Mandy and Brian in Englewood.
Yeah, thanks very much, Tyler. We'll get back to you very shortly. But in the meantime, several big stories today on Power Lunch outside of the Mutual Fund Conference, including former Treasury Secretary Tim Geithner saying we're not finished with financial crises, but, well, we'll explain the but part in a minute.
Election day in the UK. Forget about what the polls say. The better question is, what does the money say?
And want to do this, guys? There's a new way to test drive a Porsche on the racetrack. That's for you, Brian, by the way. It is a great story, and Phil LeBeau has it all for us coming up. But we do start with the market rallying today, shrugging off comments from Fed Chair Janet Yellen yesterday that equity valuations are quite high. Stocks, as we can see there on the board, sitting near session highs with a triple-digit gain of 127 points for the Dow. Brad McMillan is Chief Investment Officer at Commonwealth Financial Network. Kenny Polcari is Director at O'Neill Securities, also a CNBC contributor. It's great to see you both there, guys. You know, Brad, I know you do agree with Ms. Yellen, but that doesn't necessarily mean that the bull market's going to come to an end, does it?
Absolutely not. When you look at where values are right now, it is pricey, but it can stay pricey for years. You remember Alan Greenspan said the market was overvalued in 1996, and it continued to rise for a couple more years.
What happens, though, when interest rates start going up, Brad?
Well, if you look at history, when interest rates rise up to about 4%, it's actually good for the market because it means the economy is normalizing. So I don't see that as a problem anytime in the next couple of years.
Jump in there because we do have a market flash now with Dom Chu. Dom, what are you watching?
We're watching shares right now, Mandy, of Yelp. They are spiking up by about 8%. They've triggered a trading halt, a pause in trading. This on a Dow Jones Wall Street Journal report that Yelp, the online review website, is exploring a possible sale of itself. This citing sources familiar. So again, if you're wondering what's happening with Yelp, it's paused for trading. It was up about 8% before that pause. This on a Dow Jones Wall Street Journal report that it is possibly exploring a sale of itself, again, citing sources. Mandy, back over to you.
Wow, that is interesting, Dom. Don't go away just yet here, buddy, because, again, I don't want to speculate who might be the buyer, but we've got to look at who the companies are that might be in the market for a company such as Yelp. Maybe not just talking about Yelp, guys. And Kenny Polcari, I'm just going to throw you completely under the bus and on the spot. I'm thinking, you wonder who might be a natural fit for a Yelp. I guess you'd have to go to an Apple or a Google or a Foursquare, but who else?
I'm not sure, but this crowd is actually right next to me, and they're getting ready to almost reopen it. 42 to a half is what it looks like here at the moment. So we're hearing all this commotion just in the background.
42 and a half is what you're seeing, Kenny?
42 and a half, 50, 60 on about 80 grand.
Wow, okay.
So now you see this 43 and a quarter half now on 110 is what they're saying.
Yeah, okay. Live television. Kenny
Yeah, so
Polcari,
it's all
Kenny, we
happening, and it's
appreciate.
all going to happen here any second now.
I'll tell
right?
you
It's gonna
what, I
reopen.
know you're trying to do two things at once, but Kenny, we know you can handle it because that's why you're down there. So when it does open, if you could just glance over to the left and certainly let us know, I'd appreciate it. Let's get back to the overall market valuations. We are, of course, keeping our eye on Yelp, guys. Hey, Kenny, at 17 times forward earnings on the PE, why is this market not overvalued when revenue growth is slowing down?
I actually think it is overvalued, and I think that's the point. I think Janet Yellen is right when she says valuations are a little bit stretched, yet, like the prior guest said, with rates being where they are, where else is an investor going to go? I mean, the Fed has said it themselves. They forced this trade. They forced investors to go into the equity space, whether it's here in the U.S. or whether it's in markets around the world, as they're all hitting or nearing all-time highs. And so, therefore, I think that is the issue. As long as these central banks continue to stay there, you're right, the market's really not going to correct. And until they start normalizing and raising rates, then you're going to see what the reaction is. But I think yesterday's a perfect example. You can feel the angst and anxiety whenever there's some sense that the Fed is going to pull away or rates going to go up.
Kenny,
you saw it yesterday.
Kenny, we're also seeing that now the trading has resumed in Yelp, and you can see a lot of movement there. But basically, it's moving to the upside by a sharp amount. It's up by 10% as we're
it's
speaking.
Up by 10, right.
Yeah,
It's trading at 42.30 last sale. 42.50
yeah, I mean, if you look
now.
at that, I mean, guys, if you look at the way this is trading right now, I mean, this is, first of all, we should point out that this is no knock against any of the reporting that's going on. This is right now a report that's citing sources. So, again, traders are right now trying to handicap whether or not there really is any kind of a definitive deal that may be in the works right now. But there are a number of companies that possibly some traders are looking at right now. Obviously, it's all speculation at this point. Brian named a few of them there, but, you know, there are companies. Of course, Google maybe wants to get into this space. Who knows?
Well, hey, Dom, let me jump in here. Remember, a lot of people forget this is kind of a New York thing. You remember Zagat, right? We all used to use the book,
the guide,
to go through and say, oh, it gets a 24 and a 12 on service. Google bought them a number of years ago. So Google has made deals like this in the past. My initial thought when the headline crossed was Apple. And the reason I say that is if you use Apple Maps, not Google Maps, if you use Apple Maps, they have integrated Yelp. So if you're on an Apple map and you look around you, you see a restaurant and it will automatically, you touch a button, it takes you to the, I may be the only one using Apple Maps, but I know for a fact that, so that they already have some kind of a partnership. And what is, Dom, you've got the computer working, my dial-up modem is still trying to get working here. Okay, what is the market cap on Yelp versus Grubhub?
I mean, Yelp right now, we're talking about a $3.2 billion company given what's happening right now. Grubhub, again, in that same kind of competitive space here, about $3.3 billion. So they're between $2 and $3 billion right now in terms of the overall market cap. But to your point, I mean, we all speculate about these names. Maybe an Apple's out there, maybe a Google. Remember that some traders in the past had even referred to Facebook as being a possible acquisition target because of the integration of social with these reviews and whether or not there's any kind of a directory approach to some of these things. So, again, this is all speculation right now, but still a Dow Jones Wall Street Journal report did trigger that move higher, and they are citing sources, so we'll see whether or not this 12 to 13% move higher here is it all justified.
Yep. Okay. So, sorry, Brian, were you going to jump in?
Well, no, Mandy, I was just thinking here, which is always a dangerous thing. But, Brad, let's try to tie this story in with the original theme of this segment about the market being over undervalued. Last week, we had a news report that maybe Salesforce is fielding offers or looking to sell itself. Now we've got a report that Yelp may be exploring a sale. To me, I'm thinking, okay, if both of those stories indeed turn out to be true, and maybe both those stories are, Brad, shopping themselves, when do people sell stuff? When they feel like they can get the maximum price. Are these two stories maybe telling us indirectly that some companies see the market as being overvalued or peak valued?
I actually think that's possible, but I think it's far more likely that we're starting to see a time when the market is starting to take off. In other words, when companies really feel they have the ability to go and move and to create value additively by acquiring, that's when things really start getting bid up. We haven't seen that yet in any significant way. We haven't seen the retail investor move in any significant way. And this kind of excitement is what could bring the retail investor in.
But do you think that's a good idea, bringing a retail investor into the current environment where we've currently got stocks, you know, at or near record highs, Brad?
Well, again, it's not a good idea or a bad idea. It's just something we've seen repeatedly in the past. I mean, if you're talking about technology mergers here in software, which you are, the obvious thought is, okay, we're into the late 1990s where Alan Greenspan, again, said stocks were overvalued, but then they took off again.
Well,
good or bad, you can start to see a case where that could happen.
Okay, they're just good. And I know you were there, Kenny, you know, when Greenspan said that in 96.
And I was here.
And it was kind of like a contrary indicator, you know. Fed chair says one thing, stocks do the other, right?
Mandy, don't forget, Janet Yellen made some comments about biotech valuations.
Yes.
July 14th last year, the IBB biotech ETF is up 30% since those comments.
There you go.
Right.
Well,
guys, can I just
crushed and then they took it back up again, right?
I just want to bring. I just want to bring you just a couple of other details on that story for Yelp, just so that our viewers can kind of get the full picture here from that Dow Jones story. They are saying now, this is according to people familiar with the matter, they are working with investment bankers and have been in touch with potential buyers in recent weeks. This, according to some of those people familiar. They said also the company could fetch more than $3.5 billion in a possible sale. And of course, the usual caveats here apply. A deal isn't imminent, one of the people cautioned, and it's possible that Yelp will decide against any kind of a sale. So
I think it's important, Don, they're wrapping me, but you know this too, and Mandy, you all know this, but I think it's important to tell the viewers who are looking at Yelp, sometimes you hire bankers because you're fending off people that are interested. Sometimes you hire bankers because you're desperate to sell yourself. And there's a big difference.
Bingo, and that's absolutely true.
Okay, we'll keep on watching this story. Thank you very much for all of you for just, running with it, going on the fly. That's what we do here on live TV. Okay.
You like to Yelp on the show.
Go to powerlunch.cnbc.com right now to see why Brad is bullish on housing. Well, utilities are the worst performing sector in the S&P so far this year, but there are 3 stocks in the sector that may be worth a second look. But first, back to Tyler at the big investing conference in Washington. Ty, what have you got for us coming up?
When we come back, Mandy, I'll sit down with Walt Bettinger, the head of Charles Schwab. If anybody has his finger on the pulse of the retail investor, it is Mr. Bettinger. We'll find out what he thinks on the great debate over indexing versus actively managed funds and where he puts his own personal money. All that and more when Power Lunch continues right after this.
From the very beginning, we had a vision of clean and sustainable energy. As we grew, we equipped ourselves with the needed expertise and infrastructure, rapidly evolved to a world-class energy provider, catered to communities, businesses, and partnerships. Today, we are proud to be the preferred partner for Indonesia's natural gas industry. Our network covers transmission and distribution routes, ensuring broad reach throughout Indonesia. Perusahaan Gas Negara. 50 years of growing. 50 years of revolutionizing. 50 years of serving. PGN. 50th anniversary.
Here in Asia, people are going insurance crazy. We talked to Aviva's Asia chairman about the prospects. Plus, after years of introspection following a massive recall, Toyota Motor is ready to expand. We'll talk about their strategy.
Pressure? All you got to do is put the ball in the hole, right? Well, try that with this guy breathing down your neck, or El Nino at your heels. Carry the water, dodge the beach, turn out the lights. Get you some of that. This guy loves the pressure. This guy's like, what pressure? And this guy, well, he's always calm, cool, and killing it. These guys are good.
On the Money interviews the people making the news and brings you the latest market and economic information that impacts your money. On the Money, this weekend on CNBC.
Fallon and Jack Black have a musical flashback.
More than words.
Plus Melissa Rivers, Jeff Garlin, and Fallon's superhero lookalike. The Tonight Show starring Jimmy Fallon, Saturday from 9 p.m.
Welcome back to Power Lunch. Shares of game maker Activision are coming off of their best levels today, but they're still up about 5.5%. The video game maker beat earnings estimates and sales estimates as well, helped by growth in its higher margin digital game business. The company's also raising its full year guidance as a result. So, Mandy, those shares again up by 5.5%. Back over to you.
Nice pop there. Well, Alibaba is also higher after beating earnings estimates. The Chinese online retailer also announcing its COO will become the new CEO next week. A swip over in the C-suite. Well, Dick's Sporting Goods is also moving high by 2.3%. BMO Capital upgrading the retailer to outperform from market perform on optimism about the company's growth prospects. And New York's top state court reviving a $120 million lawsuit against Goldman Sachs. The suit alleges that in the time leading up to the Great Recession, Goldman lied about a pool of mortgage securities backed by subprime mortgages. Brian?
All right, Mandy. Well, many of the world's investing titans meet today to discuss all kinds of wide-ranging topics such as navigating this volatile stock market, the impact of any future rate hikes, and, of course, the next big investment idea. Let's go to a big idea himself. Tyler Matheson speaking with many of those power players in Washington, D.C. Tyler, I just want to eliminate all potentials here. Are you going to buy Yelp?
Am I going to? I am out of the market for Yelp.
So
I'm not a Yelp user. I'm out of the market.
70
my
billion
wallet
to go.
is squarely in my back pocket.
Thank you.
That's right. Just a few billion. I'm a few billion shy. You know, if you want to know where Americans' money is going, look no further than right here at the mutual fund investment company's big annual meeting. Over the past decade, investors like you have put in an average amount of $379 billion into long-term stock and bond funds every single year. Meantime, what have they done with their holdings of individual equities and individual bonds? Every year, on average, they have sold about 430 billion of those things. So the money is going into managed products, ETFs and mutual funds, 18 trillion in all. And one guy who has a big hunk of it is Walt Bettinger of Charles Schwab. I sat down with him yesterday, and we covered a lot. One of the big debates is whether indexing has won over managed mutual funds. Lately, the indexers have had the upper hand here. They've outperformed the average managed funds. Sure. What do you think?
Well, I think it's a point in time, and I would be careful to declare victory on the part of indexing.
So it's not game, set, match?
I don't think so. But in fairness, after the passage of Reg FD that required companies to disseminate valuable investment information at the same time to everyone, post Reg FD, it has become more difficult for active managers to beat the stock market. And it's not just in the large cap asset classes that many people will acknowledge. It's actually almost everywhere around the market. So as we sit here today, index investing has taken a strong position relative to active, but I wouldn't call the game over yet.
What does Walt Bettinger do with his money? I'm sure a lot of your money is tied up in Schwab stock.
I was going to say, most of my money is in Schwab stock. But I actually maintain a balance of Schwab stock, cash. I'm always a believer in a meaningful cash weighting, some indexing, and in a few places I'll use active management, particularly in fixed income.
Let's talk about another sort of hot topic, and that is the role of ETFs. They've been a tremendous growth area for your industry, your business over the past decade and a half. And I wonder where you think ETFs are appropriate and best, and where you think managed or index mutual funds have the edge. Are ETFs being used broadly, appropriately?
I think they are for the most part, but there's no question in the ETF space, you've got the development of very niche-oriented products. And that's driven by late entrant ETF managers who are not going to take out the big three or big four managing the core asset classes in ETFs. To grow, they have to create a niche product, hope they catch lightning in a bottle, that it gets hot, captures a lot of flows, and then when it turns cold, some of that money stays there. So you've got a little bit of that driven by the firms trying to build their ETF business. We worry a bit about that type of investing on the part of individuals, but I think that's what's driving many of the new building small ETFs today. I wouldn't say, though, that the world of ETFs and mutual funds are necessarily in opposition to each other. I think both will grow and both will continue to be successful. The one area that I think ETFs have not yet made the inroads, and they will, is in your typical 401k. It's inevitable that people who invest more and more in ETFs in their outside assets will start to ask the question, why can't I have ETFs in my 401k? It's been a technology barrier to date. We're working to overcome that. I think that's one thing you'll see change in the next decade.
Because they are tradable minute by minute, are they prone to being overtraded, over speculative ETFs?
Well, you could argue that in some cases, but I don't really think so. So let's talk, for example, about settlement. If you have mutual funds in your 401k, you can trade them every day, right? You can trade actively with those. ETFs have a 3-day settlement. So actually, you can't day trade as much with an ETF in a 401k as you might with a mutual fund.
Let's talk a little bit about one of the broad changes that I think most people in the business expect is going to happen later this year, and that is slowly rising interest rates. Already this week, we've seen the 10-year bond go up above 2.2%. That's a fairly significant move.
It is.
How do you think individual investors are going to react to that? Are they well positioned for that? Are they going to be surprised by the effect of rising rates on, most especially, their bond portfolios?
I don't think they will, in that most of the increase is likely to be at the short end of the curve. Now, if you do get meaningful increases in the long end, and you talked about how the 10-year has moved, that's going to create some NAV or net asset value declines, and you could see people in bond mutual funds and bond ETFs wanting to sell if that occurs. That's probably the biggest issue that sits out there. I'm not sure that history shows that equity markets move a lot on the early increases that the Fed might make. But you could see it if the long end of the curve goes up, people wanting to sell. And of course, what is talked about a lot in the industry is, will there be enough buyers at the point in time that those who want to get out of their bond funds or bond ETFs are ready to sell?
Time will tell.
Time will tell for sure.
It's an interesting argument about whether, Brian and Mandy, individual investors are ready for rising interest rates. I'm not sure I agree with Mr. Bettinger there. I think people undervalue or underweigh the risks that their bond portfolios may well face in a rising interest rate environment. But time will tell, folks. Back to you.
Yeah, time will tell, and we'll get back to you very shortly. But in the meantime, as we head out, the big news that was breaking earlier on our show, the report that Yelp is exploring a sale. The stock is currently up by 12%, sitting at $42.82. And of course, lots of people, including us, speculating about who a possible buyer of Yelp would be if indeed this is the case.
Almost all FX platforms talk the same talk and deliver the same results. Because most online trading platforms are outdated clones of the same old, delivering the same old. The new Oryx Optim multi-asset platform from ADS Securities. Revolutionary in the way it performs, revolutionary in the way it looks. Oryx Optim for institutional trading from ADS Securities. The future of trading.
Get ready for a food war face-off.
Let this food war begin.
Michelle Lean gets down to business.
I just want to stick a straw in there and just slurp it all out.
To settle the score between food rivals.
This is one of the best Chinese recipe I've known. I'm winning it for my grandmother.
Once and for all.
Are you ready to end this war?
But only one can win.
And let your own taste buds decide.
Food Wars Asia. Tuesdays at 8 p.m. on Food Network.
I do think the Conservatives will affect investor prospects in the UK in two big and two small ways. The biggest way is if they continue with their commitment to hold a referendum in 2017 on British exit or renegotiation with the EU, that will put a huge damper on foreign direct investment in the UK, as well as people willing to site manufacturing and other products there.
All eyes on the US jobs number. Will wages growth, closely watched by Fed Chief Janet Yellen, show signs of a breakout? We will preview the non-farm payrolls on the next edition of Capital Connection.
We're here to help you get up to speed very quickly.
You got to be fast because the markets are moving.
We get to talk to some of the brightest investors and smartest people in the world.
And you say, did you believe that he said that on Squawk Box?
On the Money interviews the people making the news and brings you the latest market and economic information that impacts your money. On the Money, this weekend on CNBC.
Chalk up another casualty to California's drought. 800 tons of alfalfa is on fire in Merced County, California. Due to severe drought conditions, firefighters have simply opted to let the contained blaze burn itself out. That might take up to several days. The fire began Wednesday night. It is believed to have been started by a machine malfunction. Gold prices closing right now, and they are closing down. And not only is gold down, but it is now down for the year. So gold is off right now, $9.20 an ounce. That's about 0.75% to $11.81. But with today's drop, gold officially is down for the year by about 0.25%. All the metals are down today. Silver, palladium, and platinum all off. Now to the bond market. Rick Santelli is tracking the action at the CME. Rick.
Well, if you just looked at the boards today, Brian, you get the wrong impression. 30s are down 7, 10s are down 5, 5s are down 3, but everybody's talking about higher rates. Look at an intraday of 10s. Yes, we spiked to 230 and change, then we went comatose. Same could be said for Boons on their spike. Sideways action pretty much the rest of their session. But if you open up the 10-year chart, this is important. We now have a double top, 224 closes in March and yesterday. Is this a double top or just a gate to higher rates? Probably tomorrow's number will tell us that. And the last chart, Euro did get the 113 handle, but it's losing ground a bit. A lot of data making many traders get a little more even with the markets. Mandy, back to you.
So much for that, Rick Santelli. Well, utilities are the worst performing sector in the S&P so far this year. But are these stocks worth a second look? Morgan Brennan has been taking that second look. Hey there, Morgan.
Hey, Mandy, that's right. So we've seen a pullback in utilities, but a number of analysts say that this could be presenting a buying opportunity. We're going to break down some of those names you need to know when Power Lunch returns. Plus, the Powerhouse.
Today's Powerhouse is home to 12 Fortune 500 companies. It is ranked the third most literate city in the nation, and the first Better Business Bureau was founded here. Can you name that city?
Tickets! Tickets! How much for the two of us? $1 each. And free if the kid's under 5. How old is he? My son is 6. Here's $2. Mister, you could have told me he was younger. I wouldn't have known the difference. True. But he would have known.
Conscious curiosity, searching for the next breakthrough. Renowned theoretical physicist Kip Thorne, the man who imagined interstellar travel, tells us about the power of curiosity. Tesla co-founder J.B. Straubel and his electric mission to make cars and homes go green. Over 60 brilliant visionaries come together to celebrate human curiosity. The future we've been dreaming of is here. Seoul Digital Forum 2015.
After a big drop for Alibaba stock this year, what will earnings say about the company's potential for growth?
And we're shaking things up with a look at a company extending the life of electronic equipment.
Global markets converge in one place. Worldwide exchange. Carolyn Roth, Wilfred Frost, and Seema Modi track the news around the trades and around the globe. Worldwide exchange. Weekdays from 4 p.m. CNBC.
It may look like all fun and games, but it's not easy being Jimmy.
Oh, Jimmy Kimmel.
No, this Jimmy.
Clearly you're not on Pinterest.
You are not the most fascinating.
What? First of all, it doesn't matter if you like it or not. I like it.
Do you want to show the clip right now? Welcome back to the Oprah Winfrey Show.
The one and only.
If it doesn't work out, I can just turn to Jay.
That's right.
The Tonight Show starring Jimmy Fallon. Saturday from 9 p.m. It's on TV, online, on the go. iPhones, Droids, Blackberries, iPads, Facebook, Twitter, and beyond. It's on the train. It's on the elevator. It's around the clock. It's around the globe. It's my ticket.
它让我保持连接 Me mantém antenado.
To emerging markets. It drives. It flies. It walks and talks. And it never stops.
Hello, everyone. I'm Sue Herrera. Here's your CNBC News update for this hour. The first meeting of the Clinton Global Initiative wrapped up in Morocco. The event is intended to offer a venue for businessmen in Africa and the Middle East network. Chelsea Clinton joined her father at that event. The Secret Service wants to add a second layer of steel spikes to the top of the White House fence to keep would-be intruders out. That's according to a proposal submitted to the National Capital Planning Commission. It is expected to be approved at a hearing a bit later today. Average long-term mortgage rates moved up this week to their highest level since mid-March. Freddie Mac says an average 30-year fixed-rate mortgage rose to 3.80%, but a year ago, the rate was 4.20%. And a big setback for former French President Nicolas Sarkozy, a French court ruling that authorities acted legally when tapping his phone. It's part of an investigation into allegations of influence peddling. His lawyers say that they will appeal. You're up to date. That's the CNBC News update this hour. Back to you, Mandy.
Okay, thank you so much for that, Sue Herrera. Bit of a rally going on in the markets right now with the Dow up by triple digits. Bob Pisani is live at the New York Stock Exchange. Bertha Coombs has been following the movers for us at the NASDAQ. Bertha, what are you watching at the NASDAQ?
You know, one of the interesting things, Mandy, today is that we're seeing the big caps really getting the big lift after yesterday's sell-off. On average volume at this point, in terms of the large caps, the NASDAQ 100, some of the biggest leaders, Alibaba, of course, after that blowout number, and Yahoo is getting a lift right along with it. Yahoo today gaining about $3 billion more for Marissa Mayer to play with and return to shareholders. Also, Activision Blizzard with much better than expected results. Avant-Go finishing its deal with Emulex, having completed a tender offer, but lots of disappointments as well. Green Mountain Coffee, Priceline, Tesla, and Whole Foods, Mandy. Whole Foods today having a huge volume day, its biggest volume day in over 6 months, and it has lost almost as much as it did about 3 years ago after another disappointing quarter. Whole Foods, of course, now going after millennials. If you want to read about more millennials in healthcare, check out CNBC.com. I've got a story there. Mandy?
We will. Thank you very much for that, Bertha. Let's get out to Bob Pisani now at the New York Stock Exchange. Bob, I mean, it was an interesting morning. We're sort of back and forth between gains and losses, but at this stage, the gains seem to be winning.
We were starting the day very early in the morning. I got up at 5:30. Futures were down like 14 handles, and it slowly came back as Germany and Europe kind of came back. There were all sorts of talk about perhaps buying bonds from the ECB over there, and I think that turned things around a little bit. If you take a look at the sectors today, yesterday materials and energy were up big time. Energy's a loser today because of oil dropping 3 or 4%, but tech and healthcare and industrial is pretty good group leading here, and the Dow right now up 110 points. Those weak energy, weak oil numbers here are wreaking havoc on energy stocks, but a big help to airline stocks. They're up nicely here, 3 or 4%. We've got an ETF for this called JET, folks. It just started a week ago. Take a look at that. JET is the ETF there, and got nice volume here up today. Finally, just want to mention those energy stocks all moving to the downside today. Guys, back to you.
All right, Bob, thank you very much. Meantime, shares of Lumber Liquidators are soaring right now. That retailer announcing a major move to try to address fears about the safety of its flooring. The stock has been slammed this year, down over 60%. But is the worst finally over for Lumber Liquidators? That stock up 1.65% right now. Scott Cohn outside of a Lumber Liquidator store in San Jose, California. Scott.
Brian, it's the kind of debate that markets are made of, and based on what we're hearing from regulators and everyone else, it may be going on for a while. If you look at the stock over the last year, you can see why some are saying it's compelling if the company can get past all of this. It's a stock that was trading above $90 not all that long ago. But Whitney Tilson, who was the big short seller here, brought some of the initial allegations about formaldehyde to the CBS News program 60 Minutes, says no, he is increasing his short position in the stock. He's saying that this move today marks a decisive point in the eventual collapse, his words, of Lumber Liquidators. Here's what's going on. We started getting word late yesterday afternoon that the word was going out to all of Lumber Liquidators stores that they were going to stop selling this Chinese laminate flooring over these issues, the concerns about formaldehyde. The company confirming it this morning. And here is Lumber Liquidators' plan now. It's sort of damage control. The Chinese laminate flooring suspended, at least suspended, the company says. And internal review of all of the company's foreign sourcing expands. Of course, regulators are looking at that as well, and the company has hired former FBI Director Louis Freeh to look at the company's compliance practices. What the company didn't talk about is the cost here. It's already said it's setting aside $10 million for the Justice Department criminal investigation that's going on. It had, at the end of last quarter, $20 million worth of this Chinese laminate in inventory. It got rid of some of that, but clearly a lot of that is still on hand and still hanging over this company, along with all of the regulatory issues. Brian, back to you.
Scott Cohn, thank you. Time now for a semi-regular series that we do called Sectornomics, where we take a dive into various groups of stocks. And despite being by far the worst performing sector this year, utilities have actually posted better earnings growth than many else of the broader market. So are there stocks to consider here? Morgan Brennan joining us now with today's Sectornomics.
Thanks, Brian. Well, after a strong 2014 and also a strong January, utilities have pulled back. They're down about 7% so far for the year. By far, as you mentioned, the worst performing sector. And we're seeing this as investors rotate out of this more defensive income producing sector as Treasury yields tick higher and as the Fed gets ready to begin raising rates. So you can see that right here. Now, analysts, on the other hand, say it's created a buying opportunity, particularly when you factor in the earnings. So take a look at earnings. While the S&P earnings growth is now about 2.1% for the quarter, utilities profits have increased 4.1%. That's according to Thomson Reuters. So here's some names to check out. Dominion Resources, which is down 7% so far for the year. Guggenheim partner Shar Pereza says its Virginia Electric Power Company is enjoying growth. It's growing its solar business. Also that it's involved in shale production with midstream and other assets in a master limited partnership. That's a name to check out. Another, consider PG&E. Now, this is a regulated utility in Northern California, a market that's expected to grow. Daniel Eggers at Credit Suisse knows that this stock trades at a discount to its peers, largely due to the San Bruno gas line explosion that the company's been dealing with since 2010. As that gets settled, he thinks that this stock could actually hike its dividend. As you can see here, that's down about 2% so far this year. Lastly, Exelon. This is the biggest operator of nuclear power plants in the U.S. So as cleaner energy regulations roll out, this utility stands to gain. It pays a 4% dividend, and several analysts think that this stock is undervalued. This stock is down almost 9% year to date as well.
All right, Morgan, Sectornomics and a couple of utility names. Thank you. All right, let us send it back down now to Washington, D.C., and Tyler Matheson, who has another market power player. Tyler.
All right. Thank you very much, Brian. You know, we've talked a little bit about exchange-traded funds, one of the hottest sectors in the managed money universe over the past decade. But another one that doesn't really take a backseat at all have been target date funds, those funds that provide a retirement solution. One of the biggest and best providers in that space is J.P. Morgan Asset Management. Ann Lester basically runs that division there. She's head of retirement solutions at J.P. Morgan, portfolio manager, winner of the 2014 Morningstar Manager of the Year Award for your work, largely with these target date funds. We'll talk about them in a minute. But yesterday, Chair Yellen made some remarks about the valuations that she sees in the equity markets, also in the fixed income markets. Right. What do you think?
You know, it's always so hard when you're investing to sort the wheat from the chaff. I think the market has gone a very long way. And certainly, you know, we've been overweight U.S. equities for years now. And prior to those comments, we're sort of reflecting on valuations in the marketplace. And, you know, from a relative perspective, I think finding that a little less attractive than we used to. But I think one of the things you really don't want to do is react to a statement that pushes a market in one way hastily. And as we can see today, right, the market's already recovering a bit. I think the market reacts emotionally. Our job as investors is not to react emotionally.
So in spirit, you kind of agree with her. I'm putting words in your mouth, but that's what I'm paid to do.
You know, the market has gone up a lot, right? So obviously it is less... there's less upside going forward, I guess I would say that, sure.
Let's talk a little bit about the interest rate environment, which is obviously critical to investment decisions. And you've got a kind of divergence. What's going on in Europe against the backdrop of what's going on in the United States. How much trickier does that make the portfolio manager's life?
Well, Problems are also opportunities, right? And that's sort of true in life, but it's also true in a portfolio. So when we look at what is going on in Europe and Japan, it is pretty clear that those central banks are going to be keeping interest rates low for longer than the Fed will here in this country. And so that is going to present some obvious opportunities and some obvious consequences. One, we think that U.S. interest rates on the long end of the curve, right, 10-year and 30-year, are going to rise less quickly than they would have in isolation without the European and Japanese bank. Now, that is a relative position that is true no matter what happens to the overall interest rate environment. So we still think there are ways to make money, even when you don't have clarity or certainty around when the first move will be, right? Is it September? Is it December? Is it sooner or later? Either way, we think the long end of our interest rate curve is going to stay relatively well contained, and so you can look at the shorter end of the curve as backing up and the long end not, and there's ways for asset allocators to make money.
Can I infer from what you just said and from your answer earlier about equity valuations that right now, as a global portfolio manager, you see better opportunities abroad broadly than you do in the United States? And if so, where? Is it Europe? Is it Japan? Where?
We like Europe. I think that's probably an easy thing to say right now. I think, again, Europe is a lot less attractive than it was a couple months ago, right? There, too, you've seen appreciation. But certainly when you're doing things like looking for yield, European equities continue to be really attractive. The trick is the foreign exchange, right? What's going to happen to the dollar from here on out? There's been a big move one way. It's corrected a little bit.
It's corrected a little back.
Again, when you look at the differential in interest rates, we do think that there will continue to be pressure on those other currencies, and that longer term we don't think the dollar will sell off a lot from here and maybe go back the other way.
Ann, thank you very much.
You're very
Ann
welcome.
Lester, J.P. Morgan Asset Management. Thanks very much.
Thank you.
We'll have more from the Investment Company Institute in a couple of minutes. We'll talk to Spider-Man, the guy who runs the Spider platform at State Street. Back to you.
Does he climb up walls as well, Tyler? That would be an amazing feat.
He will climb walls, I promise.
Okay, shares of Amazon rising today, $427 a share, but one analyst says it could go even higher. Plus,
the city in today's powerhouse is home to Target's headquarters. Peanuts comic strip creator Charles Schulz was born here, and one of its nicknames is the City of Lakes. Can you name that city?
Almost all FX platforms talk the same talk and deliver the same results. Because most online trading platforms are outdated clones of the same old, delivering the same old. The new Oryx Optim multi-asset platform from ADS Securities. Revolutionary in the way it performs, revolutionary in the way it looks. Oryx Optim for institutional trading from ADS Securities. The future of trading.
Morning. This as a sequin. I talked about doing sequins, but not. An exclusive collection we're doing for Paris, sort of give you the overall tone.
The Tory Burch Foundation has supported 1,600 enterprises.
And we're just starting. How did you do on the test? Shoulders need to come in. That looks nice. Hi. I don't have time to read the Wall Street Journal.
After a big drop for Alibaba's stock this year, what will earnings say about the company's potential for growth?
And we're shaking things up with a look at a company extending the life of electronic equipment.
A new season. Golf's best tee it up as the race for the FedEx Cup begins again.
The wait is over for Jimmy Walker. He makes it to the winner's circle.
Watch all the drama unfold with 500 FedEx Cup points on the line at each tournament. Welcome to the 2014-2015 PGA Tour season.
On the Money interviews the people making the news and brings you the latest market and economic information that impacts your money. On the Money, this weekend on CNBC.
Welcome back
to power lunch stun gun maker Taser's recovering from its lows of the day so far, but still down almost 4%. The stock was downgraded to a market perform rating from a prior outperform by analysts over at Oppenheimer. The firm argues shares are fully valued after the stock met and exceeded its prior stock price. So again, a lot of words for saying valuation concerns, Mandy. Back over to you.
Yeah, down by nearly 4% there. Thanks, Dom. It is time for the Powerhouse, home to 12 Fortune 500 companies. Yep. We're talking about Minneapolis, Minnesota. With us now is John Schuster of Coldwell Bank. Good to see you, John. Let's check out some of these Minneapolis market stats before we get to the actual houses. So according to Zillow, the median sale price is about $215,000. Properties are listed on the market for an average of 95 days. And our first listing is 17432 Kildare Way, listed for $430,000. The taxes are just over $5,000. 4 bedrooms, 4 bathrooms, 3,000 square feet. What makes this a good house, John?
Well, this is a brand new listing of ours in Eden Prairie, Minnesota, a southwest suburb of the Twin Cities. This home is in a hot neighborhood called Delwood Estates. This home has been meticulously cared for. It's got an open floor plan, screened-in porch, professionally landscaped yard. You know, we've seen about a 20% increase in the Twin Cities in average sale price in the last 2 years. We're in a seller's market, and we're seeing many of our listings sell in multiple offers.
Okay, a seller's market in a hot neighborhood. Second listing here, John, 10631 Water Lily Terrace, listed for $525,000. Taxes of nearly $6,000 annually. It's got 3 bedrooms, 3 baths, 3,000 square feet of living space, and maybe a few water lilies thrown in, right, John?
Exactly. This is an amazing detached townhome in Woodbury, Minnesota, a southeast suburb of Minneapolis and St. Paul. It was named number 12 last year in Places to Live by Money Magazine. It's part of the Dancing Water Association, a maintained managed association, community swimming pool, tennis courts, putting green, golf course. Amazing, amazing property. It's got a gourmet kitchen, open floor plan with tons of light and tasteful upgrades throughout.
Okay, into the powerhouse of the week. 108 Pioneer Trail is listed for $1.1 million. Taxes of around $13,000. 4 bedrooms, 4 baths, and 4,000 square feet of living space. What makes this, I mean, it's more than double the other 4-bed, 4-bath building, right?
Well, in the land of 10,000 lakes, we had to showcase one of our beautiful lakefront properties.
Beautiful.
Now, this sits on Lake Riley, which is about 25 minutes southwest of the Twin Cities. Sits on just about 4 acres, 134 feet of lakeshore. Coming in, it has an updated kitchen, updated bath, just a beautiful property. If you're going to live in Minnesota, we absolutely love our lakes. This is a fabulous opportunity to own pristine lakeshore in the Twin Cities.
It did not get its nickname for nothing. Looks beautiful there on the lake. Thank you so much for joining us today, John Schuster. Okay, well, the celebrity powerhouse belongs to Vince Vaughn. It's a Chicago penthouse, and the price is $13.9 million. 5 bedrooms, 4 full bathrooms, 4 half bathrooms, a lot of bathrooms, and 360-degree views. The previous owner was Hugh Hefner. Doesn't really look like Hugh Hefner's style to me. It's missing a few ladies, but there you go. Very nice house. Brian.
An appeals court rules the NSA phone program is illegal. The very latest on that next. Plus, success in business takes grit and determination, especially in the face of adversity. Captain Sarah Cudd of the U.S. Army will show you how it's done. Stick around.
Working with professional and equal business partners creates a stronger confidence. Right across the land of opportunity, confidence and harmony, with a strong and growing economy, a young, expanding middle class, talented human capital. And a huge market to achieve higher levels of success with abundant opportunities together. Invest in remarkable Indonesia.
Right now, the outcome really, in terms of a bullish outcome for the pound, mostly against the euro, would be obviously a majority conservative government. A coalition that is led by the Conservative would also bode well for the pound, mostly against the euro. But at the end of the day, it's really fundamental factors that are going to drive the pound against the euro and against the dollar.
They claim it will revolutionize everything from entertainment
Virtual reality is pretty cool.
to computing and defense.
More and more time is going to be spent in simulators.
But when will it all become reality?
There's not a lot of practical implementations of virtual reality.
From touring a world that no longer exists
The roots of our history can be in the hands, in the eyes of everyone.
to hardcore gaming. The edge of virtual reality, only on CNBC.
CNBC's editorial news gathering infrastructure has really helped Nightly Business Report become a more vital, interesting, quick-paced program, covering the ball game as it is being played. It's CNBC's ability to send Michelle Caruso-Cabrera to Kiev, to have Eunice Yoon on the ground in Beijing, Steve Sedgwick out of London. These are the kinds of things that give us a dimension and a depth that I think are really unmatched in business television.
Sometimes in life and in business, the most important value is the ability to push on when things seem impossible. Look at that. Last week, Army Captain Sarah Cudd finishing a 12-mile run in full gear when she collapsed. And within sight of the finish line, the video has gone viral, and it shows Captain Cudd struggling to get to her feet. She is urged on by her comrades crossing the finish line. The run was only one part of the requirements to earn the Army Expert Field Medical Badge, which the Army confirms Cudd has indeed since earned. Wow. Tough Cudd. Love it. Tyler.
Wow, that is amazing. Well, a federal appeals court ruling today involving the legality of the NSA's data collection of phone records. It's an important story, and Eamon Javers is here to tell us about it. Hi, Eamon.
Hi, Tyler. Welcome back to Washington.
Thank you.
Actually, this day, the news is in New York, and that's where this federal appeals court ruled against the NSA's phone metadata collection. This is this broad collection program that we've heard so much about. The appeals court now ruling that actually the section of the Patriot Act that the NSA has always pointed to as making this program legal actually does not authorize such a broad and sweeping program. The section of the Patriot Act is due to be reauthorized this spring in any case. The White House has said that the president supports redoing the entire phone metadata program to allow it to be done in a more legal way that would keep the data in private sector hands. Meanwhile, today, Senator Mitch McConnell, the Senate Majority Leader, took to the floor, though, of the United States Senate to defend the NSA. Take a listen.
ISIL uses Facebook, uses Twitter, its online magazine, and other social media platforms to contact and eventually radicalize recruits online. If our intelligence community cannot connect the dots of information, we cannot stop this determined enemy from launching attacks.
So, Tyler, obviously this is a program that we're going to be hearing a lot more about. This is just one step in the process, but it's a setback now for the NSA.
And that congressional debate certainly going to heat up over the next weeks as that law expires. Eamon Javers, thank you very much. We'll have more here from the Investment Company Institute in just a couple of minutes, but meantime, let's go back to Brian.
All right, Tyler, thank you very much. Meantime, Mountain View, California City Council says no to Google's new headquarters, but yes to LinkedIn. The latest on the Silicon Valley land wars coming up on Power Lunch.
Almost all FX platforms talk the same talk and deliver the same results. Because most online trading platforms are outdated clones of the same old, delivering the same old. The new Oryx Optim multi-asset platform from ADS Securities. Revolutionary in the way it performs, revolutionary in the way it looks. Oryx Optim for institutional trading from ADS Securities. The future of trading.
Get ready for a food war face-off.
Let this food war begin.
Michelle Lean gets down to business.
I just want to stick a straw in there and just slurp it all out.
To settle the score between food rivals.
This is one of the best Chinese restaurants I've known.
I'm winning it for my grandmother.
Once and for all.
Are you ready to end this war?
But only one can win.
And let your own taste buds decide.
Food Wars Asia. Tuesdays at 8 p.m. on Food Network.
All eyes on the US jobs number. Will wages growth, closely watched by Fed Chief Janet Yellen, show signs of a breakout? We will preview the non-farm payrolls on the next edition of Capital Connection.
You may have seen the news.
What stocks move on that?
I'm going to tell you which stocks are going to go higher and which ones are going to go lower.
It's important to respond quickly, but it's more important to get it right.
You will not be a sucker if you watch squawk on the street.
Adam Scott was a dominating force on the PGA Tour this season, never missing a cut in his 17 starts. He posted his 11th career victory at the Crowne Plaza Invitational after a birdie on the third playoff hole against Jason Duffner.
How about it?
Adam Scott. With that, Scott became the first player to win the Texas Slam, capturing all 4 PGA Tour events in the Lone Star State. And the Aussie finished out the season 12th in FedEx Cup points. Watch the PGA Tour all season long, right here.
It's the all-new CNBC Pro. CNBC's premium digital destination for exclusive insider content with buy and hold game plans and insights from top fund managers. Keep up with CNBC's portfolio competitions. Get real-time trades and portfolio theory from the experts. Plus, tradable maneuvers using big data market patterns you can't find anywhere else. Get your 30-day free trial now with annual subscription. Go to cnbc.com/pro.
Coming up at the top of the hour, more on the breaking news on Yelp. Reports the company is possibly exploring a sale of itself. The stock is higher. We'll get an analyst take on that. Also ahead, former Treasury Secretary Tim Geithner out with a warning about a potential other financial crisis. You'll want to hear what he's had to say as part of our exclusive interview. And McDonald's does 2 things which some are calling a little, I'm trying to be nice here, weird. We'll show you what they are. It's all ahead. But first, let's get back out to Tyler Matheson at the ICI General Membership Meeting. Tyler.
Brian, thank you very much. There's probably no area of the managed money universe that has experienced the kind of growth that exchange-traded funds have over the past decade or so. About 10 years ago, there were about 400 ETFs. Now, more than 1,400 of them, and many of them are under this guise. Our next guest's supervision, Jim Ross, the head of State Street's SPDR platform of funds. Welcome, Jim.
Thanks for having me.
You were literally there at the creation of the first ETF. Did you have any idea what their potential was, that they would grow to now $2 trillion?
So I would love to say I did, and that would be completely false. I'll be honest, the early days we were hoping to have something that worked, had some success, but the first 5, 7, 10 years we weren't sure. We saw growth, we saw usage. It was intended for more institutions. I think we've seen a broad adoption. And obviously, I think it's been great for the investor. It does bring a lot of great features for investors. But in the early days, I can't say we saw. In the early days, we thought 3 to 5 of these maybe.
Obviously, I'm asking a guy who runs ETFs a question that I can anticipate you're going to have a good answer for, but it's this. If I were trying to choose between an index mutual fund or an exchange-traded fund, who should choose which for what purpose? Is there a simple answer?
Probably not a simple answer, but there's many different answers depending on what are your goals, how you're trying to invest, what kind of choice do you look for. Do you need some of the features of ETFs, which would be intraday trading? Low cost is obviously one key point. And then what kind of exposure you're trying to get. ETFs tend to have a bit broader product set these days, so much more opportunity for a variety of different exposures. I think it also depends on really how do you want to hold it. Are you investing through your brokerage account? Probably easier to use ETFs, much more straightforward, and you hold them in your brokerage account just like you would a stock.
Have the proliferation of them, the bologna has gotten sliced pretty thin. I mean, a lot of the products are tracking big, broad indexes, but some are very narrow. And I suspect that there are some investors who are maybe not using them appropriately, using them for speculative purposes, which kind of defeats them. Do you share that view or not?
Well, ETFs are made so that folks can use them for very short term. tactical transaction if that's their choice, or for obviously long-term buy and hold investing. I have ETFs in my portfolio that have been there for a very long time. So I think it depends on what your goals as the investor are. Really, when I think of the ETF, it's a tool for you to do your asset allocation and figure out whether you want to make a short-term tactical bet. Obviously there's ETF trading that is done very institutionally oriented, but I think from an investor standpoint, ETFs allow them choice. Choice doesn't require that you trade. And I think that's something that's been kind of misunderstood about ETFs because they're called exchange-traded funds. Everyone assumes you have to trade them. I have ETFs in my portfolio. I have not traded for years. So I think it really gives the investor the choice to be tactical when they so choose, and the financial advisors really do appreciate this choice. Some of them want to be very tactical with their clients' assets. They have a strategy around it. They're actively managing their asset allocation towards outcomes and towards goals, and they want to be able to take that advantage of some of those more niche ETFs to try and get to those areas. And sectors is one of those spaces where we see that a lot, where people want to make bets on sectors.
Right. Jim, thank you so much. The original Spider-Man, folks, the guy who runs the spiders for State Street. Great. Jim, tremendous. Great to have you with us. All right, that'll wrap it for the first hour from here. We've got much more in the second hour of Power Lunch. Meanwhile, though, let's go back to Mandy.
Indeed. Thank you very much for that, Tyler. Good stuff. Well, Brian, we're going to hand it over to you for that second hour.
All right, Mandy, thank you very much. It is now 2 o'clock on Wall Street, 1 o'clock in Chicago. The Dow's having a very good day. It is higher, and you are watching the second hour of Power Lunch. I am Brian Sullivan. Melissa Lee joining us for the NASDAQ as always. And we begin with a developing story on Yelp. That stock spiking. It's on reports the company could be exploring a sale. This is something that has been on Jim Cramer's radar for a while. Listen to what Jim said last week.
Now, let's play investment banker for Yahoo or Priceline, two companies that are very much in need of growth. You merge Grubhub with Postmates and Instacart, and you suddenly got a one-stop shop way to get anything you want delivered right to your door in one easy app. Anything. Not sure which place to order from? Acquire Yelp, and you can have the reviews right alongside the app, giving you a Vox Populi rating system.
Rob Sanderson covers Yelp for MKM Partners. He joins us now on the CNBC Newsline. First off, Rob, I'll ask you, do you believe the reports that Yelp might be for sale or have a potentially interested buyer?
Hard to really have a view on that. It's a strategic asset. They have a unique asset, great content, could fit well at a number of different players, and I think that local space is on everybody's radar, and it's very difficult to penetrate. And here's a company that has a lot of momentum there early on.
Well, there's two ways to sell, and I pointed this out in the 1 o'clock hour, which is this. You sell because you got buyers who want to pay you a premium, or you sell, Rob, because you need to sell. Which one do you think Yelp would be in?
Yeah, I think the momentum in the local ad space is still there. They come through a quarter of some misexecution, and this has been a battleground stock for some time. I don't think that there's a need to sell for the company at this point, but I think that should an offer arrive, they'd have to consider.
Rob, when you say they don't need to sell, do you mean that the balance sheet is good, that they're generating enough cash flow? Because when you take a look at the most recent quarter, I mean, it was a miss, basically. They took down the guidance for the second quarter, and where they're really losing out is desktop. And while people want to migrate to mobile monetization is tough these days.
Yeah, their mobile monetization story is pretty healthy. It's not unlike their desktop monetization story. So the transition doesn't hurt them like it does for CPC-based ad models. That the desktop is declining, but this is, local services is a mobile app. It's really about the future is really mobile for this company more than many others even.
Do you think, Rob, that perhaps Yelp, I don't want to say missed the boat, because obviously the stock there are some out there who do believe that the stock could actually be acquired. I mean, TripAdvisor added 5 new restaurant sites in the past year. Priceline paid $2.6 billion for OpenTable. Google, a while back, got Zagat. So at this point, I mean, who could be left who hasn't already gone down this path?
I think all of those names could still use even more content in the local space, and that's really what it's about. It's the content. Content wins in the end, and this company has more than anyone. So I don't think that there's any shortage of people that would be interested from a strategic fit.
All right, Rob Sanderson of MKM, we appreciate you joining us on short notice, buddy. Thank you very much.
Yep, no problem.
All right, let's turn now to some concerning comments from our former Treasury Secretary. Listen to what Tim Geithner told our very own Steve Leisman earlier today on CNBC.
The next time we get to a financial crisis, and let's hope it never happens again.
Oh, it'll happen again.
It'll happen again.
Yeah. I mean, it won't be like this.
I cannot imagine at this moment a Treasury Secretary going to the Congress and saying, give me $700 billion to bail out the financial system. That will not happen.
In the end, the only way you protect people from the effects of classic panics like we had in 2008 is to have the central bank and the government step in and take risks the markets can't take.
All right, Steve Leisman, who got that exclusive interview, joining us now. Steve, great interview with Tim Geithner. I mean,
thanks.
Did he surprise you when he said, yeah, we're going to have another financial crisis at some point? Sounded like it's a given.
You know, Brian, this gets at one of the great questions about markets, which is that essentially, do we live on an active fault line? It's just a matter of when we trip, or is it a matter of, you know, we're driving a car and it's how we drive it as to whether or not we have an accident? I think the Treasury Secretary kind of sides with the former, which is that it's just a matter of time and all you can do is prepare yourself. And by the way, Brian, it's worth pointing out, he says we are much better prepared for the next financial panic or financial crisis than we were before. But it still doesn't answer the main question, which is the idea of his notion of the government is going to have to step in no matter what.
Because the reason it took me by surprise, Steve, is that I know he's not in government anymore, but during the financial crisis, what we heard from Geithner and the president and everybody else was, let us step in, create thousands of pages of new regulations, and we'll help prevent the next financial crisis. Now you got, well, by the way, it's going to happen again. Now, he did say not this severely.
Right. I mean, I think what they would say now, and I don't know that they said prevent back then. I think what they're talking about is make it less likely. But Brian, you and I both know that it's almost over time the absence of a crisis that can create the complacency that sows the seeds for the next crisis. So the question is this an avoidable outcome? And it may not be.
Are you saying human greed may be unavoidable?
Human greed, complacency. You know, the very notion of the Federal Reserve raising quarter points, tightening, created a loose situation. That's one of the histories that people tell right now.
I'm going to buy you a Dutch tulip and some railroad stocks, my friend. Steve Leisman, thank you very much.
No beer?
That's later. Melissa.
Detroit, Puerto Rico, Stockton, California. We've talked at length about the challenges these debt-laden municipalities still face in a rising rate environment. And if you believe folks like New York Fed President Bill Dudley, these cities are just the tip of the iceberg in terms of problems facing the $3.6 trillion muni market. Not everyone, though, is all doom and gloom, including Peter Hayes. He runs a $116 billion muni group for BlackRock. Peter, great to have you with us.
Thanks for having me.
I want to start off here with Puerto Rico, since we did mention that in the introduction. Jeff Gundlach of Double Line has about $45 million in exposure as of March 31st, increased his stake, making the case that you can get 11% tax-free yield on securities that mature in 2035. To the average person out there who's looking at yields historically low levels, that might seem really attractive.
Yeah, the reason, there's a good reason the yields are very high. And part of the reason is that you're thinking about taking on emerging market-like risk. So you better be comfortable with the volatility that comes with that. Puerto Rico is a very complicated situation. It's much different than sovereign, et cetera. They don't have the IMF to rely on. They don't have a central bank, et cetera. And it's unlikely that the federal government, in terms of the U.S., will come in and bail them out. They have 16 different issuers, and a restructuring would be very complicated. So we think that they're still an over-levered economy that ultimately has to restructure. Why? Because the economy is not strong enough. And ultimately, the restructuring will lead to complications and falling prices and even higher yields.
So that might be even more attractive. I mean, I think that the risk is only if, or not, I don't want to say only if because that's simplifying it too much, but if you believe that Puerto Rico is going to declare bankruptcy, then there could be a risk to your bond. But if you believe that they are going to work and